The Bitcoin ecosystem is really starting to heat up, and I personally believe that a lot of layer 2s on Bitcoin are going to get major traction this year. Stacks is the largest of these L2s, and there are a couple of different dApps that I think are worth having on your radar, especially before they release their Nakamoto upgrade on the Stacks chain. So in this video, I'm going to go over some of the top DeFi protocols, go over a little bit about what Stacks is about, and lastly, my thoughts on the ecosystem. Without further ado, guys, let's get into it. First things first, what exactly is Stacks? And one of the reasons I have ChatGPT up right now is if you guys are ever looking to learn a little bit more about a blockchain or something a little more complex, I highly recommend going to ChatGPT because it does a really good job at summarizing the key points. But the main things that you guys have to know is that Stacks is trying to extend the capabilities of Bitcoin by building a layer 2 that allows smart contracts to be on the Bitcoin chain. And what's really interesting is Stacks actually settles their transactions on Bitcoin, and it's able to read transactions and read data happening on the main layer 1, and with that data be able to implement smart contracts on the layer 2. They do this with a unique consensus mechanism called proof of transfer, which is a little bit different from the traditional proof of work or proof of stake, where this POX anchors to Bitcoin for security and leverages its blockchain for transactions. So inherently it is as secure as Bitcoin, and this new Nakamoto upgrade coming up is actually going to improve the security even further. Once again, the main point of this layer 2 is to have faster transactions, but also add the capability of smart contracts for Bitcoin, and they're able to do this with their new language called Clarity. They also have all these different dApps, and they have this unique concept called stacking, where you can actually get your stack tokens, you can stake them in a way, and then you're actually able to earn a Bitcoin yield from that. And then the Stacks token is used for the governance as well as all the different transaction fees that happen on this layer 2. A couple more things that I want to note is that Stacks has been building for years now, and it's by far the largest and most adopted layer 2 for Bitcoin. And one of the reasons I'm looking at a lot of different projects in the Stacks ecosystem is because they have their Nakamoto upgrade next month. A lot of times transactions fail on this Stacks chain and it's still very slow, but this new Nakamoto upgrade is going to reduce the block times for transactions from 10 minutes, which is Bitcoin, to just 5 seconds. And they're also having a lot of different security features being added on top of that. Then around 2 months after that, they're actually going to have SBTC, which is a synthetic Bitcoin in a way, but it's one-to-one peg. So now all of a sudden, all these people that have Bitcoin are going to be able to get this SBTC and then leverage that SBTC on all of these different dApps, while at the same time having their actual Bitcoin that they can redeem at any time. So I think this is going to unlock a massive amount of liquidity. And I think the Bitcoin ecosystem and layer 2s in general on Bitcoin are very undervalued in a way, not financial advice, in terms of their actual potential as Bitcoin really starts to take off in this next bull run. Now on to the actual projects building on Stacks. Right now there aren't a ton of projects, guys, simply because it's early and a lot of different projects are kind of meme projects, are not really having developed too much. However, you can go to their main Stacks site, which I'll put in the description, and you can see all of the different apps that they have, especially the highlighted ones. And I'm going to highlight 5 that I think should be on your radar at the minimum, as well as 2 meme coins that are personally on my radar. The first one is going to be none other than Alex Labs. It's currently at around the 280th largest token in the crypto market. And I believe that Alex is probably the closest beta play to the Stacks ecosystem, meaning if Stacks does very well, odds are Alex is going to follow Stacks pretty closely and may even have larger gains simply because of the smaller market cap. Now, Alex has almost $200 million locked. They've had $1.3 billion worth of TVL and about 52,000 active wallets. And what they offer is they offer the ability to do BRC20 inscriptions. They have a launch pad, they have an EVM bridge as well as a BTC bridge, and they allow all of these different swaps with not only their order book, but also their AMM DEX. And in the future, they're going to be adding liquid staking as well as real world assets. The team is pretty stacked if you scroll down below, and you can get a little bit more information about all the different things they're building. And a lot of times they'll actually hop on different interviews and stuff like that, where they go more in depth about what their actual protocol is about. I'll have in the description their docs where they go into deeper details about the platform, but the big thing they're saying is the DeFi landscape is teeming with possibilities. They're thinking that Bitcoin DeFi is set to take the center stage, and they want to be on top of that DeFi revolution that happens in Bitcoin. So we're talking about the ordinals, the BRC20 tokens, and Bitcoin L2s, in particular Stacks, which Alex is based on. And it goes into talking about how L1 is going to expand expand a lot. We're going to have L2s, and we're trying not to be a spectator, but take part of this growth and build a lot of the infrastructure needed in order to interact with all these different DeFi applications that are going to be coming out. And you can see here, they're hoping that they can break the barrier between the L1 of Bitcoin and L2 to create a seamless Bitcoin DeFi experience. Now, as I said earlier, a lot of transactions on Stacks actually fail, and we're hoping that this Nakamoto upgrade improves that. And I think once those improvements come, it's going to be way easier and way cleaner for a lot of new people to get into this, because right now it is a pain in the ass to make a transaction and it takes forever. But when you look at their site, you can do different swaps, there's pools, there's the order book, you can even go to their farm tab and you can farm some of these different tokens in order to get a pretty high APR. And then they also have their launch pad where they've done a few different launches in the past. What's really interesting about Alex in general is you can see the amount of TVL has been rapidly increasing ever since about November of last year. What you'll notice about a lot of these different Bitcoin L2 stuff, especially on Stacks, is that a lot of things really started taking off in November, and now they've just been going on this skyrocket moon mission. And I think that's only going to increase as more and more people start getting into this ecosystem, because in my personal opinion, it's still very early and not a lot of people are paying attention to these L2s yet. They've also had about 1.3 billion in trading volume. Once again, the vast majority of that over the last 3 to 6 months. And then the amount of active wallets has been relatively consistent since around December to now. Alex Labs is definitely a project to pay attention to. I currently don't own any right now, but I'm looking into getting in simply because it's the 280th largest token and they only have a circulating market cap of about 255 million and an FDV of 420 million. So I think this is pretty small in the long-term span of things, because if Bitcoin goes on a massive run, which we're all expecting happens, then there's a chance that these different L2s, especially with the Nakamoto upgrade and especially with Stacks being the most adopted, for then that to go on a run. And if that goes on a run, then some of that money should in fact trickle down to some of these different dApps within the ecosystem. So for Alex, the main DEX and the main trading platform that's been building all this stuff on Stacks, to be such a low market cap in the grander scheme of things, I think is pretty undervalued. But once again, this isn't financial advice and I haven't personally bought any as of yet. The next project here is called Arkdiko, and they are a whole entire borrowing and lending protocol. And they also built a liquid staking protocol called StackingDAO, which I'll go over in one of the next projects. They're able to use the layer 2 to build a bunch of different smart contracts in order to create these self-repaying loans, as well as native Bitcoin backed loans. So you're able to leverage your Bitcoin even further. I'll have their white paper in the description where they go over a bunch of different stuff, but their main executive summary is that it's a decentralized non-custodial liquidity pool where users can collateralize their assets and mint a stablecoin called USDA. This enables depositors to gain increased liquidity in the form of a soft pegged US dollar stablecoin while maintaining original asset exposure. So they're utilizing this proof of transfer, which is really interesting, where you can actually deposit, let's say, Stacks in order to use as your collateral. They're then stacking that Stacks and earning a Bitcoin yield, and that is being distributed between everyone that's doing these different lends and borrows. And what this means is that you can actually borrow for a negative yield, aka you can actually borrow and make money at the same time, because those Bitcoin yield rewards are higher than the stability fee or the interest rate that they charge on the loan. So pretty interesting concept that's happening over on Stacks. You can see here that there are actually a few different vaults that you can borrow from. You're going to need to add liquidity into these vaults, and then you have a collateralization ratio, which you can determine how much you want to borrow against your collateral. And you'll see that there's this liquidation ratio of about 140%. So you have to make sure that it doesn't get below that or you'll simply get liquidated. And right now there are 3 different vaults. It's the ST Stacks vault, which is their staking DAO liquid staking token for Stacks. You also have the main Stacks token, and then you have XBTC, which is a synthetic of Bitcoin. On the platform, you're also able to stake Diko in order to get the ST Diko, which has a 6.63% APR. And then you also have that USDA, which is also getting around a 33% APR. Just realize, guys, that that USDA is used as a reserve in case a lot of liquidations happen. And if liquidations happen, then that USDA is buying back those collateral assets at about 10% below market value. But if there's ever a massive liquidation string, aka Stacks goes on a massive dump for whatever reason, some sort of exploit, whatever the case is, then that can can take all of your USDA from the pool. And then there's even a world where if their reserve funds get drained, that they all of a sudden are going to be minting a bunch of Arkdiko tokens in order to actually cover all of this bad debt. So that's just one negative thing to think about when it comes to this protocol. I don't expect something like that to happen, but you never know in this space. And if all of a sudden Stacks goes on a massive dump, there might not be enough liquidity to actually make sure that that peg retains its authenticity. Whenever people do end up getting liquidated though, you are able to go to their liquidations tab and you're going to be able to claim these different tokens that you got using your USDA. The Arkdiko token is also a governance token where you're going to be able to vote for these different proposals, such as the emissions for the token. The last thing that I wanted to bring up about the token is the analytics, and you guys are able to see that there's already $22 million worth of TVL, which is on the smaller end in the grander scheme of things for sure, with these different vaults having about $17 million, and then the swap TVL about 5.4 million. And you're able to see in the past year, especially since November, December, that things have just been going on a massive run as far as this TVL, and I expect that trend to continue as Bitcoin continues to pump and this Nakamoto upgrade goes out. Right now, the Arkdiko token is around a $50 million market cap with an FDV of around 66 million. So once again, a smaller market cap coin. You can also go to their balances tab at any point and you can get an idea of all of their different reserves in case you are worried about a massive liquidation string, which could, if it gets to the end, like I said, actually negatively impact Arkdiko. The next project on the list is called StackingDAO, and this is the same team that built Arkdiko. So this is one of the reasons I'm adding it in right now. Now, the major thing with StackingDAO is you're able to get your Stacks token, you're able to stake it, get an APR on it, and in exchange, you get that ST Stacks, which you can in fact go back to the Arkdiko site and actually borrow against this on top of that. The big thing to pay attention to with StackingDAO is it can unlock liquidity for your Stacks token, where now you can have that ST Stacks token, you can borrow against it on Arkdiko, for example, or you can add it into different liquidity pools to earn even additional rewards. And one of the cool things is that you're getting points while doing this. So when they release their token in the future, you should be eligible for an airdrop, and you can learn more about how to do that in their points tab. I believe for every one Stacks token you have, or ST Stacks, you're going to get 1 point. So if you have 1,000, you're going to get 1,000 points. And then if you borrow against it, or if you add it towards liquidity, you actually get even more points on top of potentially qualifying for other airdrops from using other protocols. StackingDAO has around 32 million Stacks tokens, which is around $112 million worth of TVL. So it's pretty crazy just how much Stacks is going on here. But once again, it feels relatively early compared to the market cap of both Bitcoin and Stacks. The next project I want to bring up here is called Bitflow, and they actually have a couple of different stablecoin pairs that you can trade from when it comes to the Bitcoin or Stacks ecosystem. But once again, they have a pair called Stacks and the ST Stacks. So you see how everything is already connected between a lot of these major DeFi applications. There's about $12 million when it comes to this pair, and it enables you to get more points on the StackingDAO, but it also allows you to earn points on Bitflow. Now, Bitflow, there's all these different pools, you can do different swaps. It's pretty much a decentralized exchange, but if you're already getting that ST Stacks and trying to qualify for that airdrop, it may be worthwhile for you to have some Stacks on the sideline, compare it into a liquidity pool, and then add it on here, get that APR, as well as qualify for that airdrop in the future. Now, the only thing to be aware of is that the actual ST Stacks token, because it is a liquid token, is usually going to go for less money than the Stacks token. So you would think that it would be a one-to-one, but for the most part, if you're adding to this liquidity pool, there's always going to be a differentiator. So just keep that in mind. I do believe though that the impermanent loss you'll suffer on this is much, much lower simply because they are the same token or supposed to track the same value. If you want to learn more about Bitflow, I'll have their white paper in the description, but they are very similar to other decentralized exchanges out there, with the main focus being on stable coins and earning real yield. You can also see in their roadmap that they're hoping to deploy BTC atomic swaps, add support for Tri Pools, which has 3 different liquidity pair tokens on the Bitflow protocol. They're hoping that they can launch their own BFF token that you can start getting those points in airdrop for. That's going to be the governance for the actual protocol. And then the big thing is that they want to have an automated system for compounding Bitcoin yields payable in SBTC, which that SBTC I think is going to be a major game changer and should come out in about 2 months. The next project on the list is called Velar, and their mainnet came out somewhat recently, and they're making a whole entire perpetuals DEX on the Bitcoin blockchain, and they actually got $3.5 million in their seed rounds from different private investors, and I do recognize a decent amount of big names in that list. If you go to their site, you can learn a little bit more about the protocol, but the big thing they're doing is building a decentralized perpetual exchange where you can do different leverages on your actual holdings as well as make various swaps. Right now, their swaps are already on the mainnet as well as different pools that you can add liquidity for in order to earn their points, which of course there is going to be some sort of airdrop with their points because they had all these VC investors and they got to make their money back. And then they also have their stake tab, which is currently on their testnet. So I don't believe they actually have their perpetuals out as of yet, but this is at least one to have on your radar. And if you want to start farming it, you can go to these different pools and farm it. I haven't really messed with this AEUSDC. It looks like some sort of synthetic. And like I said, I have not personally dived into this protocol yet. I just figured it would be worth having on your radar based on the amount of money they were able to raise and the perpetual DEX they're trying to build. Those are the 5 major DeFi applications that are on my radar, but I wanted to include 2 meme coins that are also on my radar, one of which is Welsh that I brought up a lot of times on this channel. I think Welsh is still pretty undervalued in the longer term span of things, being the main dog meme coin of the Stacks chain. And I think if Stacks can really take off, there's going to be a meme coin that takes off, and Welsh is the biggest, it's the first, and it's the most adopted. Now, one of the things that Welsh really suffers from is not really being on very many centralized exchanges. It's only on MEXC, but supposedly they already submitted an application to KuCoin, and that application is going through the process right now. So if they can get listed on KuCoin, if this Nakamoto upgrade comes out and does a really great job and unlocks a lot of liquidity on Bitcoin, once that SBTC comes out, you might have a lot of liquidity also unlocked through that. And then you also have the halving of Bitcoin happening within the next 30 days. So a lot of different things happening that I think is going to boost up the Bitcoin in Stacks ecosystem. And I think if Welsh can get on these centralized exchanges now, it could in turn potentially run, because right now there's already a lot of meme coins on other chains going on massive runs. And right now the FDV is under $100 million. So I do own some Welsh as far as a longer term play. And this is one of those situations that's either going to go on a massive run or it's going to absolutely dump. We have to see what happens in the next month. But if it doesn't make a lot of movement in the next month, then it's probably one I'm going to have to sell my position in, because when is there going to be as much catalyst as there is right now? Another one to keep on your radar is actually Leo, and this is the second largest meme coin over on Stacks, and Leo is based on the cat of Muneb, who is one of the main developers and founders of the Stacks chain. So pretty interesting. I don't own any Leo right now. I personally think Leo is almost a beta play to Welsh, so I would rather have Welsh, and if Welsh does in fact go on a massive run, then I might move some of my money into Leo from Welsh, simply because people might feel like they missed the boat on Welsh and now they go into Leo. But this is some far out there strategy. We first need to see Stacks actually get adoption and actually improve from this Nakamoto upgrade first. We then need to see some of these different DeFi protocols really gain a lot of momentum, such as Alex and Arkdiko. And then if that happens, I think Welsh can go on a massive pump. And then I think some of that money could potentially move into Leo. So like I said, I don't own any right now, but I'll be paying attention to it in case I was right on the Welsh meme. But yeah, guys, that pretty much wraps up a lot of the major protocols to be paying attention to on the Stacks ecosystem. I do think it's relatively early right now, and there's a lot of catalysts coming out, but always do your own research. And remember that none of this is financial advice. This is just my personal thoughts and opinions of what's going on in the crypto and especially the Bitcoin L2 scene. If you want to stay up to date on some of these different things going on, make sure to join our Discord in the YouTube description, open up a support ticket, ask for a trial pass, and in there we have a lot of different alpha covering a bunch of different plays that I just talked about today. But yeah, guys, that wraps up the video. Hope y'all enjoyed it, and I'll catch y'all later.